Alright guys, today I made 57 points trading the E-mini, and I'm going to show you how I did it and the reasons why I entered. So the last couple days we had here, this was the FOMC report, and then the next day it started to pull back, and then the trade tariffs came out, and then it crashed again. And you can look at the scale on the right. This whole area here is 50 points. And so we've had some really big and crazy moves lately. So let's look at the trade that I made. I entered here and exited down here. So the reason I got in this was because I felt that this selling was so exceptional that we would have to have more down. And I'm going to skip to the daily chart and give you reasons why I thought the context meant that we would be going down after that selling. So we have this is the daily chart. We have a spike and a channel, and when it breaks out of the channel, you often test back to the bottom of the channel. So we have a magnet down here because of that. There's also a gap on this daily chart. So you see here the high of this day and then the low of the next day did not overlap. So there's a gap there, and that acts as a magnet. 2900 is also down at this level. That acts as a magnet, and also we have this 150 period moving average down here. So all of this area is a target, and once you broke out of this channel and we started to see these big bars going down, then we were likely to go down and test this area. So this was Wednesday's FOMC day. A big bear bar breaking out below of this channel. And then on Thursday, I'll go back to, so this was Thursday, and we rallied at the start of the day very strongly, had about 20 bars without a pullback, had 20 bars without a bar going below the prior bar. Very, very strong buying. And then you get this surprise bar like this. And as I learned, this was because of the trade tariffs. So you get this huge surprise bar, and in the back of my mind, I know we have the daily chart like this, with the context that if we break below, then we're probably going down just the bottom of this channel. So Wednesday's FOMC day, and then a big rally. And when this rally failed and started to go lower, this really created a double top here. So a big bar down, and then it failed to go above here, and then went lower. So when I took the sell, I sold on this bar right here. And at the point in the daily chart, that was right about right here. So we had rallied up, and then we were coming back down here and testing down here. And that's when I sold. I knew the context was that we were, if we went lower, we were probably going lower down to here. And I mean, look at these two bars compared to all of this, and compared to this is what a regular day looks like over here. So these two bars are huge, and they're especially important when the context is that we're going down to test levels below. And so this is the micro E-mini. I wouldn't have wanted to. I wouldn't have, even if I had a very large account, I probably wouldn't have done a regular E-mini just because of the risk of it. If I sold here and put my stop up here, that would be about 40 points risking, and I just don't think that'd be worth it. But with the micros, you can trade so small that if you take a big loss like that, then it'll be manageable. So this is the micro contract, and I sold here, and I originally planned on getting out around 2900 or 2910, but the reason I got out was, so today's Friday, and then one push, a second push, and a third push. That's a wedge, a possible wedge bottom, and it got this good bull bar. So I just decided to get out above that, and so that was my exit. And of course, afterwards it went down lower and it went farther down. But I think this is a reasonable place to get out, especially when you've had all this profit. You don't want to give all that profit back. Alright, so I hope that's clear. I'll go over that one more time. Spike in channel. When you break out of the bottom of the channel, you're likely to come back and test the bottom of the channel, and then from there, it would be a trading range. We also have this open gap here, and so everyone sees this gap, and at some point it gets back to this gap and it'll close that gap. We have the moving average, and we have the 2900 big round number. So all these areas down here, and then when you start to see these huge big bars, then we're probably going lower. Alright, so if you have any comments or questions, just leave them and I'll be happy to get back with you. Alright, thank you.